Okay, getting set then for the market open this Thursday morning, and while we are, keeping a close eye on that all-time peak on the Nifty, right now at least going by the pre-open rates, it seems that it's going to be a flat start, but comfortably above that 18,700 print. So here come the first rates, 18,732 on the Nifty. So we continue to be at those yearly highs, that of 2023 levels that we've not seen since December 5th of 2022. That's last year, 18,738. And I'm not quite sure whether this is a fresh high for this year. We'll just get you those stats in just a second from now. Going strong, let's see what the Nifty Bank is up to, considering this didn't quite contribute yesterday. Yes, there was a bit of a recovery within 9 minutes of trade, but right now the Nifty Bank is absolutely flat at that 44,276 odd level. A lot of stocks which are going to be in focus, and Tata Motors, especially after its analyst day, the fact that they're aspiring to be at the forefront of the global battery manufacturing industry. Tata Motors scales up further higher, 571 on this stock. Tata Com as well. The management is expecting to double their digital revenue over FY23 to 27. They've quoted a margin price band of about 23 to 25%. Tata Com gaps up 3%. Since we're talking about Tata Com, let's also take a look at what Idea and Bharti are up to, considering telecom was your biggest sectoral winner yesterday. Tata Com as well continues its up move, as does Vodafone Idea. Both these stocks are holding up quite nicely. Bharti, though, a lot more tempered, but 846 is a good level regardless. And then, of course, come those defense as well as railway manufacturing names. Titagarh, the board is going to be looking at raising funds via QIP or a rights issue on their June 10th board meet. Titagarh is gapping up this morning, 2.5% higher. Mazgaon has been on a different orbit altogether, and now they've signed an MOU with ThyssenKrupp for marine systems or submarine projects. So that's another stock which is seeing a solid move, almost 5% higher for Mazgaon Dock as we speak right now. This Gati as well, the volumes continue to improve in the month of May, and they've seen a traction or uptick of about 9% on a month-on-month basis. That stock again, a gap up there, 6.25% higher. There's Ather as well, wherein they've executed an LOI with a US-based oil feed company for supply and manufacturing of certain products. That stock also has gapped up 1,002 on Ather as we speak right now. I want to check in on what OMCs are up to, because a lot of news flow really coming in on this pack. While yesterday, of course, HP, BP, IOC were big movers, we understand that the government may actually nudge OMCs to cut fuel prices as financials are in better shape. There's been an ease off in crude prices as well. But we understand from our sources that OMCs pretty much are in a wait and watch mode, and they haven't taken any action yet. But right now you're seeing OMCs ease off just that bit. Hero MotoCorp, the management spoke with us. So we're going to be playing bits of that exclusive interview also. They're looking at launching a new program called Hero 2.0, which is going to be involving an entire new range of premium motorcycles, in addition to giving a new look to its stores, launching some new premium stores as well. Hero MotoCorp holding up almost about 1.5% as we speak right now in trade. Let's see what IT as well as a pack is up to, because off late you're not seeing the best of moves, at least from the mid-cap IT space. Nifty IT is still under pressure, down about almost 0.5% or so. But Kunal, flat ahead of the policy, but in good stead regardless. I mean, 18,740 is not a bad print.
Yeah, it's not a bad print, and very slowly and gradually we are moving towards that potential breakout of the new high. I think I like the approach of the indices, that it's very slow, steady and gradual, and it's taking all the sectors along with it. So I think that's a good sign for the index overall. The stock which I think looks very attractive from the auto pack would be Maruti, and that would be the opening trade. My sense is that the stock, after yesterday's mild bit of a downtick, looks very attractive in terms of risk reward. So would be expecting a possible new high for Maruti, and would be playing for a momentum play for the stock within the near term.
Okay, let's get in the first trade from Naresh then. And Naresh, what's looking good on the charts?
So looking at Indus Towers, that's a stock which at 160 looks an interesting risk reward buy. Retest of the breakout also. So at 160, 161, keeping a stop loss at 156, expecting a move towards 180 plus levels.
Meera joins us now. Let's connect with Divina and understand that what she makes of the current market action and how things are moving for Indian markets. Divina, good morning. Thank you for joining us. It's been a dream summer of 2023. Is the best of this summer 2023 rally over?
Good morning, Nikunj. Before the summer started, at end of March, I had put out a tweet with no ifs, buts, if this, then that kind of thing, said very, very clearly that it was time to be back in the markets. In fact, I specifically also answered the question that is this the bottom? I said, I don't know whether it's the bottom, but it is definitely somewhere close, and the risk is of missing out an up move. I think I said it on your channel also sometime after that. And at that time, the index was sub 17,000. So we've seen that moves, as you've mentioned. So as always, people tell me that tell us when to get out and when to get in, but very few people action it then, because at that time there is uncertainty and everybody wants to wait and watch, and then that that part of the move is over. But I don't think the full move is over, definitely. Even now, both for global equities and Indian equities, equity as an asset class is looking pretty good, and even relative to the globe, India is definitely one of the better markets. So I don't think the move is anywhere close to over. And again, the risk is in not being invested. Now I get people asking me that should I wait for a 10% correction before getting in, and I said there's no guarantee that you're getting that 10% correction. As of now, our systems don't show that there's going to be anything like that.
What are your systems saying, and what gives you the belief that a 10% correction is not around the corner?
There is we use a lot of systems together, which tell us that. And even if you look at simple things like PE, etc., it is not as if that you are at the extreme edge. And I think last time we spoke about, you asked me that what's going to be the theme for the next few months, and I said the crude price, which is down very significantly from last year over. I think about 35-40%, that kind of range. That's going to be one big positive if you're looking for a specific positive for both the Indian economy as well as the corporate earnings, because crude is not just crude oil, it impacts a whole lot of downstream petrochemicals, which are inputs for many industries, from FMCG, textiles, chemicals, and so on. And even other commodities are in a kind of a softer phase this year. So that helps the input prices for a lot of companies and corporate earnings. You can make a trade-off between passing on the decline in prices to the consumer and giving a boost to demand, or having the margin expand, or a combination of the two. In any case, it will be positive. So if you're looking for, it's not as if the market always has a one-to-one correlation with what's going to happen next quarter to earnings, and it reflects that. But as I said, overall, that picture is looking just fine.
I recall that in the month of April as well, you had spoken about how crude oil is going to be a very critical theme that will impact many sectors. And since you discussed that, I won't probe more. But I wanted to also understand what the outlook is within the entire financial space, given the fact that we do have, of course, the RBI policy, and there is that stark view with the large cap stocks that haven't quite participated in this leg up of the rally as we're making our way towards those life highs. What's your view on how one should be approaching large cap private sector financials?
I think I've spoken earlier on your channel that I am a nervous investor in banks and lenders, let us say, as a general rule. So throughout 2020 and 2021, we were not investors in banks to any significant extent. In fact, it was a risk relative to the index because the index has such a high weightage. Middle of 2022 onwards, we became market weight on banks, so which with price action has become overweight, but not really on the non-bank financials. We will have still very small holdings in the non-bank financials because, as I said, as personally, as well as the fact that we generally prioritize risk management over everything else. That's a space we are generally not very comfortable with. So, that's where we would be just now. that banks slightly overweight, but not the non-banking financials.
Let's spend some time understanding that why a correction is not around the corner. I mean, I think it's a Templeton quote which says that more money is lost in waiting for the correction when the real correction will occur. अभी 10% correction तो नहीं आएगा. So let's talk about where you can make 10% gain. Do you think this market in next 6 to 12 months can give another double-digit gain? I mean, 10% from here also.
Because I have told you before, in 30 years, I have never given an index target. And as
No, it's a stock-specific target.
writes in the book, it is objective ignorance. It is something you cannot know. And so everybody making a prediction is actually just taking a punt. And I don't see anyone, at Diwali in January, everyone gives a prediction, but there are no charts showing that what is the track record of those predictions versus actuals for those particular experts for the last 5 years. If you start putting that, maybe people will stop giving the predictions on the channel. But as I said, here the risk is still is in not being invested, in missing out on up moves. I mean, in general, that's where our reading of the market is.
There is an election cycle in next 12 months. And 3-4 months ahead of the election cycle, everybody would say, okay, let's wait. What if this happens? What if that happens? What if markets do not like the verdict? Do you see this election cycle fear factor stroke suspense playing out this time around also?
Difficult to say. It's still far away. So, I mean, it also depends on where the market is then. As you said, that's like towards the end of when the elections are due. There are state elections in the middle and so on. So, I mean, that's still too far away to worry about. We normally, look at everything from scratch every quarter. So, still some time away to make a punt on that, if at all. And normally, I mean, again, markets don't make it easy that you think if this is the verdict, then this will be the market reaction. It can be quite something else, as we've seen in the past, right from 2004 onwards. That, the immediate reaction and the eventual reaction and so on.
To be a change of heart, at least from a market standpoint, and a change of communication from promoters when it comes to consumer tech and fintech. For companies like Paytm, when they went public, the IPO prospectus was that we don't know when we will make profit. Now the same companies are ready to give a guidance that we will be profitable very soon. How do you approach this sector now? Because this is still a high growth sector. They're speaking the language what Devina Mehra likes, cash flow and profits now.
Yeah, but the cash flow and profits are still far away compared to still the valuations that they have. And I said just a while ago that for us, risk management is priority. So I mean, we are not in the business of taking punts which play out basically on luck. So we like something where there is predictability and there's enough money to be made on that. I was just looking at our small case offering, and in the last 1 year, it's up 30% as against the index being up 12 and odd. So, with a diversified portfolio with close to 30 stocks across sectors, you can make that kind of money. So I am not in the business of doing this. And again, it is just because they are off their IPO prices doesn't necessarily mean that they are great value at today's prices. Again, we are getting lost by that. So, I mean, wait and watch. Sure, let's see what happens.
Fair point. So, to your mind, which is the most overrated sector in this market and underrated sector in this market? I'm asking a very simple question.
I can tell you what we like and what we don't like. So one theme, of course, which I've spoken, I think, many times on your channel, because that has been the biggest overweight sector for us, right from now more than a year and a half, about 20 months or so, since October 21, which is capital goods and industrial machinery. And each quarter we think that is the story over, but our system still like it. We have switched stocks and so on, but the sector as a whole, we still like. Our systems like banks, as I said, we'd be somewhat overweight. What we have added in this calendar year would be autos, auto components, a few construction stocks, a few pharma stocks. IT, we we remain, I think, slightly overweight, not a hugely overweight, but slightly overweight. So that would be broadly the, and of course, yeah, not everything is a sector call. As in 2022, some of our biggest winners were ITC and Raymond's, which were not sector calls. In terms of what we don't like, you were talking of the refinery OMCs, so that sector still we don't really like. Real estate also we're generally still avoiding. Then there are some of these consumer durable paints, that kind of thing. I don't think that sector prospects are still very good. I mean, that might change as inflation comes down and all that. But for now, those would be probably the sectors that we don't particularly like.
Okay, my next question, Devina, is something which we've been, in a sense, probing and quizzing everyone on the channel. Do you think in next 4 to 5 years, there is not a strong possibility but a strong probability that the Sensex could touch 1 lakh? It is not a prediction, but purely based on maths and historical returns.
I mean, it will touch a lakh at some point. It has to, but I wouldn't like to give an exact time frame for that. And as you said, the historical returns play out over a period of time. There are, if you look at the Sensex itself, in 40 years, even if you look at each decade, the returns have been very different. The first 1980 to 1990 decade, it was 21% compounding. Then it was 14%. Then it was 17%. 10 to 20, it was only 8 and odd percent. So the variation can be quite large. Right now, we are in a good phase simply because we had that very long low return period and for a whole decade, and where we also underperformed the global markets almost every year. So we are in a better phase. As I said, India is, while global equities are themselves not looking bad at all, India is looking still definitely one of the better markets. And one of the big changes which we made in global portfolios of late has been to go overweight Japan. That's another, that's a country where we think the markets have had a turn. So it's interesting to watch the markets, but as I said, I don't make predictions on the indices.
All right, and nothing's going to change your mind either. So thank you for sharing with us at least your outlook on individual sectors and the markets as a whole. That's Devina Mehra. Just a quick check-in on the index. 18,745 is where we're currently perched at, with the broader markets as well looking good, and support coming in from the likes of JSW Steel, Power Grid, ONGC and Bajaj Auto. Time to move right on then, and let's discuss the outlook when it comes to L&T's green hydrogen investment strategy, what the view is when it comes to thermal versus renewable, as well as how we can look at making green hydrogen economically viable. We've got Subramaniam Sarma, who is the whole-time director and senior executive vice president energy at L&T, now joining us on the show. Thank you so much for taking time out. I just want to get a broad view from you first up as to what your outlook is on the hydrogen ecosystem playing out in India over the next 3 to 5 years and how things have shaped up so far.
Firstly, good morning. Thank you for having me here. Great to be on your channel. Yeah, I think 3 to 5 years is a good time horizon. I think a lot of things will fall in place by that time. For this industry to evolve, there are 3 or 4 main pillars which we need to work on or build upon. One is on the supply side, supply in terms of able to produce the value chain components and supply them in the market, like the solar panels, the electrolyzers, and so on and so forth, and the storage batteries, etc. And in that space, as you know, the government had put in a lot of enabling policies in terms of production-linked incentives, etc. And there is already a momentum gaining on that front. The second pillar would be the demand side. I think that there again will need some government enabling policies to create the demand. And there's a lot of work going on, and we are hoping the new hydrogen policy will address that aspect. It's not just the domestic demand, but also the export demand, and the SEZs and for green hydrogen, green ammonia could be another enabling policy that will push the export opportunities as well. And there I see that the hydrocarbon industry and the metal industry would be the front runners in terms of adoption of green hydrogen. The third pillar, I would say, is the consumer behavior itself. I mean, not the retail consumer, but generally the whole fraternity around how much we value environmental, cleanliness, and how much we sort of concern about global warming, and how much we want to adapt these newer sources of energy in our daily lives. Because at some point, I mean, though there is a lot of effort to bring price parity, I think there is going to be always be some gap, and people will have to be prepared to pay certain amount of premium to protect the mother earth for the future generations. And the last pillar, of course, will be the infrastructure. I mean, how it evolves in terms of distribution, in terms of regulatory frameworks, etc., etc. So a lot of work to do, but I think, as I said before, 3 to 5 years is a good time frame, and many things will happen. There's a lot of momentum. Yesterday, I was in Delhi. I was attending the FIPI event, which is an annual event. The Honorable Minister was there, and he addressed. And I think there's a lot of upbeat about this. There's a lot of positive sentiment about how this whole industry will evolve.
What are the parallels in the world which give everybody conviction that green hydrogen is going to be a game changer? I mean, right now everybody is at a very incubation stage, but are there parallels where this has gone beyond just proof of concept?
I mean, we don't have to go, Nikunj, outside India. I mean, you see, I mean, one of the parallels I would sort of draw upon is the digital wave which has caught up in India. I mean, like pre-COVID, post-COVID, just after COVID, we said that we want to have a cashless economy, we want to digitalize. I think, honestly, I think putting hand on your heart, none of us believed that the pace of adaptation and the pace of technological revolution and the penetration across the country would be so rapid and so fast. And that is, I think, is a great. I mean, so once certain things, people see value in it, people see benefit in it, the adaptation becomes faster, including in a country like India, which is very complex. So I think, and there is a lot of other examples, even in the technology field, like what is happening in AI space and etc., etc., and even in the industrial revolution side. The solar energy, again, is another parallel. I mean, like 10 years back, the cost of solar energy was 5x, 6x to conventional, and now it is competing. So I think I'm personally quite optimistic, Nikunj, that this will catch up. I mean, yeah, only variable is whether it's 3 years, 5 years, or 7 years, but it has to happen.
Hydrogen been successful anywhere in the world? I'm just trying to understand again a parallel of where green hydrogen has been implemented and where it has leads to significant amount of savings and energy benefits.
No, I think it is still an early stage, but if you, as I had said earlier, also the pace of implementation and adaptation is going to be quite different in different continents and different regions of the world. I think now, if I had to say, if I had to sort of say where it's been gone ahead, is mostly in Europe. Europe is definitely far ahead of for the rest of the other continents, and there are many projects. And I think there is also a steel plant, which is a very large scale steel plant, which is called as a green steel plant. I think it's in Norway or Denmark, where the entire steel production is going to be using green hydrogen. So I think, and they have a lot of surplus renewable energy now coming from the wind farms. So they are looking at using that energy for producing green hydrogen. There's also another refinery which is going to get completely using green hydrogen. In US, there's been a big wave in producing a lot of blue ammonia and blue hydrogen projects. So I think US and Europe is caught up. I mean, I think it's moving very fast, and then we'll see that in Australia, and then we'll also see that in Japan. There are a few thermal power plants in Japan who are now blending ammonia with a conventional fuel as an alternative source of energy. So yeah, I mean, there's a lot happening.
Okay. How will NLT benefit because of this? One is that we have the total breakup of the energy book you have. Now, if this becomes a very large technology, could this be game changing for the aggregate business of L&T, or this is going to be just one of those businesses which will incrementally add to your profitability?
No, I would like to believe it's going to be a game changer because, see, I think L&T has been in the energy infrastructure building for almost now 3 decades, yeah, since 1994. And we have played a very active role in development of the entire infrastructure, whether it is in the upstream or midstream or downstream, both in the domestic market as well as in the neighboring countries, including West Asia. So we built a very strong capability on the project execution and understanding of that domain, where the green hydrogen is going to be consumed. Then on this other side, we also have a very strong manufacturing base. We have been quite strong in high-tech manufacturing. And again, that's another space where we will have an active role in the green hydrogen value chain. And the more interesting thing, the third leg, what we have as part of our green energy strategy is the development role, where we have formed now a joint venture with IOCL and Renew Power, where we're looking at co-investing and developing some of the projects. And I think that is a model which is going to be definitely, if it works out well, is going to add significant amount of volume of business and a continuous revenue stream. So I think all three put together in terms of EPC project business, in terms of manufacturing, and also in the development role in the green energy space, in addition to where we are already present in the fossil fuel sector as well as in the power sector. So this is going to be a more of a supplementary addition to the business. So I think all in all, I see this as a great opportunity to add a significant volume of business to L&T's portfolio.
All right, really appreciate your time and so glad you could join us, and good luck with green hydrogen. I certainly hope that it changes everyone's life when it comes to how future energy needs.
Thank you, Nigun. Thank you.
One stock which is absolutely been on a tear from a market standpoint is Tata Com. I mean, what a stellar comeback it's been for them. Same time last year, struggle, now revival and flourish. Amur Lakshmi Narayan joins us, Managing Director and CEO of Tata Communication. Lakshmi, good morning. Thank you for joining us. What really has struck the right chords with the markets is that you are aiming to double data revenue. But the CAGR growth in data revenue in last 5 years, in 3 years is about 6%. What gives you the confidence that you can grow at about 20% in the next 5 years? Because that means you are really seeing a lot of visibility going forward.
See, I think what we have laid out is an ambition for doubling our data revenue from the current 14,000 to 28,000. As you rightly called out, we have done 6% in the past. Last year, we did 10%. What gives me confidence are a few things. One is the market out there. There is a lot of things that are changing in the market with respect to the digital infrastructure itself. People have gone to the cloud. People are wanting to use the internet. Security becomes a big challenge. People don't today, the way the businesses communicate and interact with the consumers and their customers is fairly fragmented across multiple channels of SMS and voice and everything else. We have a solution which integrates all of that, make it more contextual, for example. And in the connected solutions, with respect to connected cars and connected devices, all of that portfolio that we have, in each of these portfolio, there is a market out there. We have been strengthening our products to play the platform story, and that is coming along quite nicely.
Right. Mr. Lakshmi Narayan, now when it comes to your margin guidance that had been maintained at 23 to 25%, do you think that we can see operating leverage play out, given that you did talk about your revenues as well doubling?
No, even the 23 to 25 would be challenging. I mean, if you thought the doubling the data revenue is ambitious, keeping this to 23 to 25% will also be ambitious. The reason I'm saying that is in our digital portfolio, we have a mix of products, right? So starting from what industry calls as a CPaaS, and we would like to think that's more of ours, slightly different with the customer interaction platform. And if you typically look at those margins would not be very high. If you look at the connected solutions, there the margin profiles are very different. In the next-gen connectivity with internet and others, that margin profile is different. So in each of the portfolio, and within those, the mix of the products, the margin profiles are very different, right? And therefore, it depends on which product is going to accelerate faster than something else. The mix will play a very prominent role in terms of, and that is why you saw in the last couple of quarters, as we raised our investments, the margin profile was declining. It's a function of both the investments that we made, and it's also a function of the product mix that is being taken to the market. And therefore, the mix and this will play an effect on the margin, therefore will have a tendency to depress. And what we are working on is for each of these products to have a glide path to increase their own margins, right? And we are hoping that, and we are working on that, as that increases and as the mix plays into effect, we can remain in the 23 to 25% range. So that's a broad answer. The mix effect, the digital margins being inherently low at the moment, and we have to work on increasing them. And these are the two factors that will play out as we scale the business.
Sure. Mr. Lakshminarayanan, currently what one is seeing is your leverage is at 1.3 times and you're guiding it to remain below 2x, right? So are you indirectly saying that debt could rise from 1.3 to 2?
Yeah, I think as I said, currently we are 1.3x. The point is we can even be at 2x and be comfortable. Our balance sheet will allow that. We will not be breaking any covenants. So we are just allowing a bit of more of elbow room for any investments that we have to make. I mean, for example, we did the Switch acquisition, which we closed a month ago. And that acquisition was all through the cash accruals internally. But we are looking at M&A opportunities as we go along. And we would know. And we are just setting ourselves that cushion room to be available to put that. And with 2x, we are saying that we would still be comfortable with the strength of the balance sheet and the ratings that we have.
Your Switch acquisition that you announced in December, this was the first inorganic growth for the company. How much will this acquisition then add to your top line and on the EBITDA front as well?
No, I think we talked about the Switch, what the revenues are, and we would be, completely integrating because that's a 100% acquisition. So we will be integrating that business. So that will give us a jump up. But the whole reason why we did that acquisition was in the media. We've been doing extremely well. So in the last year, we did 20,000 events, which are all live events. Which are very exciting for millions, hundreds of millions of consumers who watch this across the TV and OTT platforms. So we are very excited to be part of that journey. But we've been playing largely in the global to global, as we call. It's a global sport and reaching global audiences. What Switch brings us is an ability to reach the regional sports, like the basketball, the football in the US, which are regional and consumed largely within the region. So that is a region to region segment. We did not have any presence there. And Switch enables us to bring a very solid presence in the US with a region to region presence. The second is it also brings the capability of production. Right. So, for example, when we talk about what we do for a Formula One or a Formula E, we have completely transformed their businesses. So Formula One and Formula E, they used to bring production trucks wherever they go, country by country, and that was a huge expense. And now we are moving them to remote production. It's like moving to a cloud. So we moved all that to a remote production. We carry all the signals across the world to a central production site, and from there we distribute it to hundreds of million viewers around the world.
talk to us about the elbow room on balance sheet. Is this largely because of you looking at some acquisitions, or would you rather digest Switch first and maybe look at acquisitions after 12 to 24 months?
Today I think the company has acquired a great deal of rigor in execution. I mean, that's what we've been doing over the last 3 years. The rigor of execution has tremendously improved. So as we look for more opportunities, we will be very rigorous in evaluating those opportunities to see if that makes sense, and if it is the right opportunity. And if it is the right opportunity, then we would do it. Because the bandwidth available for us is across business unit, because media is a business unit and they have done one. Now, if you ask me, will I do another one within the media? I perhaps will not. I will wait for this to be integrated and digested, as you say, before we look at anything else. But there are other units which are functioning, which have a different product portfolio, and in those units we would be looking at. So partly what you said is right. We would allow this to digest within that unit before we look at anything else. But the other business units, we have the bandwidth and the ability to be able to look at opportunities as and when the right ones come along.
Sure. But there is also that surplus land, right, of 757 acres on your books. You did hint at some point that monetization plans are going to be on in your last meeting. What could be the value of this land parcel, and when could the monetization happen? Is it more of a near-term trigger or a longer haul story, you think?
No, it's both near-term and long-term. What I mean by that is, we don't have any, a set timeline as to when we will do what. A few things have to come together, right? So one is obviously the legal paperwork of titles being ready and all of that, and the land usage and so on. And the second is the right monetization opportunity for that property has to come along. And when these two come together, then we will execute on the monetization, right? So that is what we said that we will do. And we will do it. This timing has to be right. We have to make use of that fund when it comes to either, as I said, any cash that comes into the company, we'll use it to invest back. We will use it to pay down the debt. And those are the things that we would use this for. So it's really a question of all the paperwork coming together, the timing and the opportunity coming together, and that is what will dictate the pace of what we have to do here.
Right, Mr. Lakshmi Narayanan, great having you on the show today. Thank you so much, as always, for speaking with us. On that note, we're going to take a very quick break, come right back. We're going to go full tilt on what to expect from the MPC.
All right, now Reserve Bank of India credit policy, the countdown has started. Not that anybody is expecting anything unique or different, because Shaktikanta Das, the RBI governor, in May had said that inflation will come down. It is not going to be a pivot, it's going to be in pause, and GDP is going to pick up. Guess what? Between the last credit policy and this credit policy, a lot has changed. Crude prices, inflation, global liquidity, and forex reserve. That is something which is working for the governor. Now that's the last MPC and this MPC. Crude 76, rupee 82.5, 10-year yield, it's okay. 10-year Indian yields 7, and CPI inflation at 4.7. But there's a big but here, and that is, where are the rains? Where is the monsoon? It's getting delayed and delayed, and the more it gets delayed, that means we are in for a bit of a nasty. Are we in for a nasty extended summer and a low monsoon and high cereal prices? As it is, rice prices have gone higher, vegetable prices have gone higher, and low monsoon, no monsoon, the trouble is going to start again. Now, 4 minutes to go, and let's quickly get a very quick mood check from my colleague Ankur, who is outside the RBI headquarters.
Reserve Bank of India Governor Shaktikanta Das will detail monetary policy and all eyes will be there whether or not there is a change in repo rate, because the wide expectation is that there will be pause once again, which is going to be announced by Reserve Bank of India governor. But we need to wait and see whether or not there is some googly from Reserve Bank of India governor. He has already mentioned it is a pause, not a pivot last time, and now it will be interesting to see whether or not there is a change in interest rate or not. Apart from that, the growth target will also be something to be watched out for, because last time there was a revision in GDP target from 6.4% to 6.5%, and since CPI numbers have come better than anticipation, it will be interesting to see whether or not current year's CPI target is also revised accordingly. One also thing which is going to be watched out from banker side is liquidity situation, because in the last few weeks the surplus liquidity in the system has improved. So what are the other steps which are going to be announced from Reserve Bank of India governor on the liquidity front is something which market is waiting. And moreover, what are the steps which Reserve Bank of India governor is going to announce outside monetary policy is something which will be interesting to see this time.
Go back to that graph once again. Last credit policy and this time's credit policy. What is the difference? Well, there's a difference. Brent, Anisha, it's the OMG moment, right?
For India, it's always great news.
No, see, you have to realize that the governor talked about a pause and he was comfortable with crude at 86.
Yes.
At 75, I mean, Shaktikanta Das is going to be doing cartwheels. I mean, what you derive comfort at 86.
Yeah.
At 75, what is that extra comfort? What is the superlative? That I'm comfortable with crude at 85, at 75, how am I feeling?
I'm excited. I'm very, very complacent about that crude worries are out of the window. We were, as it is, getting it cheaper from Russia. But if I remember it right, the finance minister had the average at what, 95 to 100 for the year? So it's materially lower than that.
But there's always a grey area. And this time around...
monsoon, is that grey area?
I think monsoon, it's not picking up. It's getting delayed. Now IMD said that okay, it's delayed. It's getting extended. Today it's what, 8th?
Yeah.
And not even a single drop of rain, so to speak, at least in Kerala, which means we are really running late. And you're running late that much, that means sowing is going to be delayed. That means crop harvesting would be delayed. That means there would be an imbalance which will happen in the short term. There are some state elections. As it is, wheat prices, I was reading somewhere, have gone higher.
Yeah.
So it's not that inflation has gone. So I think there would be mention of monsoon. I get a sense that there would be mention of monsoon.
But do you think, like yesterday we saw the Bank of Canada surprising after a pause with a 25 basis point hike. Same happened with the Australian Central Banker. Do you see there's any remote chance, a 10% probability that we can see a surprise hike?
No.
Not
it's
at
not
all.
happen today. It's not going to happen today because excepting monsoon, which is again still not, a verdict is not out. I mean, monsoon can start late and it can pick up. That's nature, right?
Outside
anyone's guess. So I think everything else is falling in the slot, whether it is crude, global credit price, global energy prices, what's happening to 10-year yield, liquidity, forex reserve currency, and the growth revival in terms of where the GDP numbers were. So all those factors are favorable. So it's 9 out of 10, which is in favor of India. One big question which could potentially, become very large. It's a small concern. It could become a headline concern if you don't get a good monsoon. But if the monsoon would have been as per normal, then this would have been like a perfect setting on the table. But nothing in life is perfect. Same time last year it was Ukraine. 2 years ago it was, COVID. Before that you were dealing with NPA problems. Before that you were dealing with bank. All right. All right.